Bitcoin, this is crazy, guys. So again, although again, if you watched the video on Friday, I gave you guys the expectation that this was just a bounce before a reversal lower. And it wasn't my personal belief. Frankly, I'm a bull on Bitcoin longer term. It was just the chart.
Gareth Soloway shares sharp insights on Bitcoin and crypto trends, covering key moves and future outlook. Stay tuned to uncover it all.
The chart, again, classic double top, reversal candle, red candle, told us downside coming. We closed below this longer term upsloping trend line. We confirmed. Okay, once it's confirmed, essentially this becomes major resistance. The big bounce on Friday on the dovish commentary by Jerome Powell took us all the way up to about 117,400. It missed my level. I said 118 would be major resistance. It didn't even get there. It did not even get there. And sure enough, 1, 2, 3, Saturday, Sunday, and Monday here, Bitcoin has moved to the downside, even making a lower low. Okay. Now, again, on a technical analysis basis, this is your next line to watch at 112,000. A daily close below this would be one step. If it confirms, I honestly think you're heading back to 100,000 on Bitcoin. But let's watch and see where this candle closes. Does it close below 112,000? Does it rally back above 112,000 today? Can it be saved? But ultimately, again, this chart, a classic case study in technical analysis, how again we broke and we confirmed, and then this level tells us we're going to get rejected and come back down, and that's exactly what happened. Now let's take a look at Ethereum or ETH here, as ETH again having a good push up, making finally a new all-time high above its previous high back from 2021. Brief and short-lived as it's come back in here. Now you can see there's this parallel channel that I'm monitoring, and the reason again is it gives us an upside kind of resistance zone around 5,100 or so. It hasn't even gotten there either, right? So in essence, it's come back in, but I still think ETH could make one more push up to that higher end. If it does come down, notice how this former support level or this current support level at 4,065 to 75 is also the lower band of the upsloping parallel. And so this is going to be your big level. If you're a bull, you need to see this 4,000 to 4,075 zone. That needs to hold. If that breaks, the floodgates are likely going to open. But as long as this holds, I think you remain bullish in the near term for ETH to push up and make one more attempt at touching the upper band of that parallel. All right, let's flip over to gold and see what gold is up to today. It is down fractionally. Gold had a little bounce on Friday on the weakness in the dollar. Today, the dollar bouncing, so it's coming back in. And really at this point, we continue to have kind of a chart that is still below in the near term this upsloping trend line and the double top, right, or the pivot high. And so as long as it remains below here, I do think gold could still come down a little bit more. But keep in mind, this is only short-term analysis. Longer term, it's a classic bull flag, and eventually it should break out to the upside. I still have an upside potential target north of 5,000. Granted, that's still a year plus out, but I still think, again, you're still looking at that as long as the U.S. government continues to kind of spend and run up the deficit. You got to think gold continues longer term to the upside, much like Bitcoin probably will as well.
Bitcoin is starting the final week of August under heavy pressure, with the price sliding back to multi-week lows near $111,000. The sudden drop, fueled by a huge $640 million wave of long liquidations, has shaken traders who were hoping for new all-time highs. Instead, fresh talk of a retest at $100,000 or even lower has emerged, as volatility and whale activity keep the market uneasy. Whales remain at the center of attention after one massive holder rotated billions from BTC into Ether, sending shockwaves across the market. Analysts like Willy Woo highlight how OG whales, who bought Bitcoin for under $10, still hold a significant share of supply, and it now takes over $110,000 in new capital to absorb each coin they sell. While some see this distribution as a healthy part of Bitcoin's long-term growth, it adds friction to short-term rallies. At the same time, smaller Bitcoin holders remain in accumulation mode, steadily adding to their stacks even as larger players take profits. With technical indicators showing weakness and analysts warning of bearish patterns, the big question is whether Bitcoin's bull run has already peaked, or if this is simply a painful reset before the next leg higher.
This is the S&P futures chart. And what we have here, folks, is the S&P on Friday with that monstrous surge to the upside on the back of Jerome Powell's surprisingly dovish comments. Now, from basically 10:30, 11 a.m. Eastern time, the markets chopped sideways the rest of the day. It was a Friday in August. Now, last night, the futures opened slightly higher. We started to fade, and we've really continued to slowly fade throughout the overnight and into this morning's stock market open, which is just under 30 minutes away. Now, again, this is going to be something we want to really watch. How much of the gains do we give back today? And ultimately, do we see more give back in the coming days? Now, something that can give us a heads up on that is the S&P daily chart. Here's that S&P daily chart where we have our trend line that has literally pinpointed each major low going back to 2023 and then August 2024. We then obviously had the big breakdown with the Liberation Day sell-off, and then it literally pinpointed the high in July and the high in August here. And that's each time we saw a pullback where to this lower yellow trend line that starts in May. Now, again, what this is called is a wedge pattern, and a wedge pattern is two trend lines that are getting closer and closer together, right? So you could have it like this. This is kind of the wedge pattern we have, but essentially price starts to go like this inside of the wedge, and it builds like a spring or essentially a under pressure environment where when it breaks one way or the other, we get a big major move. Now, in technical analysis, what we know is that in general, upsloping wedges break to the downside. And again, remember, when I say in general, that doesn't mean every single time. What it means is odds favor that. Okay, now again, I would say about a 70% chance that the upsloping wedge breaks to the downside if you take in all the wedges in charts going back throughout, let's say, the last 20 years or so. All right, so if you have that information, and then we add in the fact that you don't really break down on the first three hits of the trend line, the fourth hit is the 50-50, and 50% odds is essentially even, right? It is even. We had a bounce. The idea is if we come back down here, your fifth hit would then be favored to break down by about 60% chance. All right, so again, watching this very closely. Now, we also have to monitor the upper range here, which we've only now tagged 1, 2, 3 times, or actually just 2 times. So it's somewhat unlikely we would break to the upside. In fact, it is not favored based on the amount of hits of this trend line. The third hit would likely get rejected. And so really, this pattern formation does favor downside potential. Obviously, we'll have to watch and see how it plays out in the coming days.
Bitcoin whales are making bold moves, shifting large amounts of BTC into Ether as the spotlight increasingly turns to Ethereum. Over the weekend, Bitcoin slipped toward $114,000 after briefly spiking to $117,500, while Ether surged to fresh all-time highs above $4,600. This shift in momentum has traders eyeing ETH as the market's new leader, with growing speculation that it could soon test a $5,200 to $5,500 range. Analysts like BitBull argue that if Ether closes the week above $4,600, it would mark the strongest weekly close in its history, signaling that this rally may have plenty more room to run. Supporting this view, blockchain data shows long-dormant Bitcoin wallets moving billions into Ether, a sign that whales are aggressively building exposure even after a 300% rally in just 4 months. Meanwhile, Bitcoin is wrestling with its own technical levels. The $114,000 weekly close is being described as key, and CME futures gaps remain a major short-term focus. Still, with whales flocking to Ether and momentum shifting fast, Ethereum's explosive rally may continue to overshadow Bitcoin's quieter price action. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news all for free. That's all for today's video. Until next time.